What, are we out of money? Don't the mutual funds have enough cash? Hey, that's my reaction to this action. After a day when the Dow advanced 65 points, S&P dipped 0.32%, but the Nasdaq lost 0.85%. With the latter becoming an annoying source of funds for everything else. Right now, at this very moment, mutual funds know that they have to pivot out of the consistent growth stocks, especially tech stocks like software and semis that don't benefit from the rate cuts. They have to then swap into the companies that can supercharge their earnings as the Fed takes rates lower. We all recognize that the cyclical stocks, the ones that benefit from lower interest rates, can go higher, maybe much higher. What's painful for many of you are the declines in stocks of companies with consistent earnings.
The house of pain.
The companies that don't really need lower rates, the tech companies in particular. They're selling off as though money managers need to raise capital in order to rotate into the rate cut winners. So why don't we do this? Let's go over the winners and talk about the losers. The rate cut winners are divided into two camps: the stocks with high dividend yields and the cyclical companies with earnings that should go higher because lower rates will bolster all sorts of industries, especially housing. Let's start with the most direct beneficiaries. Let's start with housing. They were all down today, and I think that's because the hedge funds and mutual funds bought these stocks aggressively ahead of Friday's Jackson Hole verdict. The mutual funds are staying long. That's what they do. But the hedge funds, they are ringing the register furiously. I mean, they're going crazy because they've made so much money. The housing stocks have had parabolic moves going to the Fed confab at Jackson Hole. So now these portfolio managers are just taking the profits. By the way, that's what you're supposed to do for a successful trade if you are a trader. Remember, these guys were always traders, not investors. So the housing trade's over, but how about the housing investment? Look, I believe the Toll Brothers, which just reported a stellar quarter last week, can go higher, maybe much higher. But this reversal is going to constrain the stock because people do not like these technical trends that we just saw. We've seen multiple long-term reversals after these kinds of moves, and they rarely turn out to be buyable, even though in theory this should be a great moment for the stock of all the home builders.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.